Shall we start? Now, go to next problem. We are in how we are going to select the capital structure. Nothing but the capital structure theory. In what basis you have to select the capital structure? Okay. Yeah. Jyotika, kindly read the question.
A company earns a profit of rupees 3 lakhs per annum after meeting its interest liability of rupees 1,20,000 on 12% debentures. The tax rate is 50%. The number of equity shares of rupees 10 each is 80,000 and the retained earnings amounts to rupees 12 lakhs. The company proposes to take up an expansion scheme for which a sum of 4 lakhs is required. It is anticipated that after expansion, the company will be able to achieve the same return on investment as at present. The funds required for expansions can be raised either through debt at the rate of 12% or by issuing equity shares at par. Required. Compute the earnings per share if the additional funds were raised as debt. The additional funds were raised by issue of equity shares. Advise the company to which source of finance is preferable.
Yes. Now, shall we start? How much the additional fund they need in this question? The requirement is whether we can be in the position to get the fund, raise the fund, additional fund by way of equity share capital or by way of debt. Am I right?
Sure.
Yeah. So, which source of finance is preferable? That is what the requirement of the question. For that purpose, the clue which is given in this question is what? Company wants to maintain same earning per share. Am I right? Or the company want to maintain same return on capital employed. Kindly refer the second paragraph. It is anticipated that after expansion, the company will be able to achieve the same return on investment as at present. That is given in this question. No. So you should be in the position to compute. You have to compute return on capital employed. Am I right? So this problem you have to solve it first by way of return on capital employed. What is the formula for return on capital employed? What is the formula for return on capital employed?
EBIT by capital employed.
What now?
EBIT on capital employed.
Return on capital employed is equal to EBIT divided by capital employed. Okay. So we have to compute EBIT first. Numerator is EBIT. How to compute EBIT? In this question, earnings before tax is given. How much the earnings before tax is given, my dear? Currently, how much the earnings before tax available?
3 lakh.
Company earns a profit of 3 lakhs after meeting its interest expenses. Right? So earnings before tax comes to 3 lakhs. But we need earnings before tax is 3 lakhs. Am I right? But we need earnings before interest and tax. Therefore, add interest. Am I right? How much the interest component? Any info for interest component? debt fund 12 lakhs, debt fund 12% agana,
1,20,000.
where it is given or what? 12%. How come 1,20,000, which is given in this question itself? Am I right or not? After meeting interest liability of 1,20,000, therefore interest is given in this question. Therefore, 3 lakhs plus interest is equal to EBIT. So how much the EBIT? EBIT is equal to 4,20,000. Am I right or not?
4,20,000.
So EBIT comes to 4,20,000. We got the numerator. Formula for return on capital employed is EBIT divided by capital employed. Earnings before tax is there. So after adjusting interest, it becomes 4,20,000. Now, denominator is what? Capital employed. Okay. So with respect to capital employed, combination of all capital is called capital employed. So what about the capital employed, my dears? Any info with respect to capital employed?
Equity plus retained earnings plus debt.
Equity share capital. Very good, Kanan. How much the equity share capital?
So 8 lakh.
8 lakhs. Current equity share capital, 8 lakhs. Then, retained earning.
Retained earnings 12 lakh.
Retained earning also given in this question, 12 lakhs. Whereas debt fund, 1,20,000 is for 12%. Therefore, debt fund is equal to how much?
10 lakh.
1,20,000 divided by 12% is equal to 10 lakhs, some ideas?
Yes, sir.
Is equal to 10 lakhs. Got it or not? Got it, my dears? Oh.
Yes, sir.
Yes, sir.
Good. So total capital employed comes to combination of all is equal to capital employed. How much the capital employed? 8 lakhs plus 12 lakhs plus 10 lakh is equal to how much the capital employed?
30 lakhs.
30 agana?
Yes, sir.
30 lakhs. Therefore, return on capital employed is equal to how much? Return on capital employed is equal to
14%, sir.
14%.
14%. Am I right? EBIT 4,20,000 divided by 30 lakhs into 100 comes to 14 agana. So company's return on capital employed, record return on capital employed comes to 14 lakhs. Got it, my dears? Any doubt? All of you got 14% is then return on capital employed. So company wants to maintain return on capital employed to the extent of 14 lakhs. Now the requirement of the question, whether we have to take additional fund by way of equity or by way of debt. Am I right? How much the additional fund they need? 4 lakhs. Am I right? The 4 lakhs you have to
4
mobilize either by way of equity or by way of debt. That is what the requirement of the question. Shall we try? Note it down.
Yes, sir.
Statement of evaluation of evaluation of capital structure. Three-column table, particulars. First one, additional fund by way of debt. Another additional fund by way of equity. So which fund is probable? You have to identify. Under the particulars, equity share capital, retained earning, and debt fund. How much equity share capital currently?
Last one in the 8 lakhs.
Debt fund. Debt fund. Equity share capital, retained earning, and debt fund. So currently equity share capital how much kanna?
8 lakh.
8 lakh. Mohan Raj Puridappa.
Yes, sir.
Retained earning 12 lakhs. Debt fund originally how many lakhs? 10 lakhs. Now additional fund by way of debt
Fund.
Then 14 lakhs. 10 lakhs plus additional 4 lakh is equal to 14 lakhs. Got it?
Yes, sir.
Are you with me or not?
Yes, sir.
Whereas next option, additional fund by way of equity. Original equity share capital how much? 8 lakhs. Additional fund 4 lakh by way of equity means what is the revised equity share capital?
12 lakh.
12 lakhs. Retained earning also 12 lakhs. Whereas debt fund is how much?
10 lakh.
10 lakhs. Therefore, what is the revised capital employed?
34 lakhs, sir.
34 lakhs. Good one. So both the option 34 lakhs, 34 lakhs. Okay. Steve Bobanidam. புரியுதா உங்களுக்கு? Then capital employed over. Return on capital employed, we got it 14%. Am I right? So 14%. Both the column 14%, 14%. Company wants to maintain return on capital employed of 14%. Next column, EBIT. Capital employed into return on capital employed is equal to EBIT. Nothing but 34 lakhs into 14% is equal to return on capital employed. Is equal to what? EBIT. How much EBIT?
4,76,000.
Good. Both the column 4,76,000. Less interest. What about the interest, my dears? 12% interest, right? So interest always on debt fund. Debt fund 14 lakhs. Out of which 12% is equal to
1,68,000, sir.
1 lakh.
1,68,000.
Okay. Lakh and 68,000. Second one, not debt fund 14 lakhs, 14 lakhs into. Similarly, 10 lakhs and 12%, 1,20,000.
Yes, sir.
Balance is equal to earnings before tax. What about the earnings before tax? EBIT.
3,08,000, sir.
Yeah. 3,08,000. Similarly, next one.
3,56,000.
3,56,000. Less tax How much percent tax?
50%.
50% tax. Balance equal to earnings after tax. Remaining 50% is equal to earnings after tax. How much? 1 lakh 54,000
54,000.
and 1 lakh 78,000.
Yes, sir.
Next. Number of equity shares. 8 lakhs is the total equity share capital, whereas share price is how much? 10 rupees, right? Therefore, 80,000 is equal to number of equity shares for the first option. Second one, 12 lakh into 10 divided by 10 rupees comes to 1 lakh 1,20,000. Therefore, earning per share comes to how much?
0.925, sir.
1,54,000 divided by 80 is equal to 1.925. Good.
1.483, sir.
1.483. Good. Therefore, which one is best, my dears? 1.92 or 1.48? Higher the preferable. Earning per share.
1.92.
Earning per share in rupees. So 1.92 is preferable.
சார் அந்த EBITக்கு ஒரு ஃபார்முலா சொன்னீங்க இல்லையா, அது மட்டும் சொல்லுங்க.
EBIT, capital employed into return on capital employed is equal to EBIT. Capital employed 34 lakhs into 14% is equal to return out of capital employed. That is called EBIT.
Okay, thank you, sir.
Got it or not? So, what about your conclusion? Better we can get the additional fund by way of
Debt, sir.
debt, so that we can maximize the earning per share. Right. So, which fund is preferable? Debt fund is preferable, am I right?
Yes, sir.
Now, characteristics of source of fund. What are all the characters are there, Kanna? Any idea? Source of fund, equity share capital, preference share capital, long-term loan, debentures, these are all called. What about the characteristics of source of fund?
Can you repeat, sir?
What are all the characteristics of source of fund? Note panigo. There are 3 characters: risk, cost, and control. Risk, cost, control. These are all 3 characteristics of source of fund. What are the risk, cost, and control? Cost, or with or not? With respect to cost, between own fund and borrowed fund, which one is costly, my dears? With respect to cost, between own fund, yes,
Own fund.
own fund is costly. Why? Which one is cheaper? Borrowed fund is cheaper. Am I right or not? Now, note it down. When compared to own fund, borrowed fund is cheaper. When compared to own fund, borrowed fund is cheaper. Because when compared to own fund, borrowed fund is cheaper because first one, dividend expectation of the shareholders. Dividend expectation of the shareholders are always higher than interest expectation of loan holder. Dividend expectation of the shareholders are always higher than interest expectation of loan holder. Ashwin, எழுதிக்கிறீங்களா?
Yes, sir. Writing of
ஸ்ரீ பவானித்வம் எழுதுறீங்களா? மணிகண்டன் புரியுதா? Second one, debt fund has the tax benefit. Debt fund has the tax benefit. Because of the reason only, debt fund is cheaper than equity fund. Okay, my dears. Good. புரிஞ்சுதா எல்லாருக்கும்?
சார் லாஸ்ட் பாயிண்ட் என்ன சொன்னீங்க சார்? டெட் ஃபண்ட் இஸ் சீப்பர் தென்
Debt fund is cheaper than, because of the debt fund is cheaper than equity fund. Two reasons why debt fund is cheaper. First one is dividend expectation of the shareholders are always higher than interest expectation of the loan holder. Second one is interest means a debt fund means we are having tax benefit, whereas own fund means we don't have any tax benefit. Okay, Mohan Raj?
எஸ் சார்.
Next, note it down. Next item, trading on equity. Concept called trading on equity. Trading on equity. It arises if return on capital employed is greater than KD. Return on capital employed is greater than KD. in this juncture, company can depend in this juncture, company can depend more on
Sir, can you repeat, sir, please?
in this circumstance, nothing but in this juncture, company can depend more on debt fund. So எப்ப debt fund depend பண்ணிருக்கலாம்? When we can expect more debt fund? If return on capital employed is greater than
KD.
KD represent what, my dear KDs?
Cost of debt.
Cost of debt. In this question, return on capital employed, how much we got it?
So 14%.
14%. KD how much?
6%.
Huh?
6%.
No. KD how much?
12% minus tax.
Oh, okay.
Minus
12% minus tax rate. Yes. So after tax impact, okay, 6%. அப்ப எது ஜாஸ்தி இருக்கு? Return on capital employed is higher than KD. Am I right or not? Hello?
Yes, sir.
Therefore, we can depend more on which fund?
Debt.
We can depend more on debt fund. That's the reason. Answer also, debt fund is preferable. Am I right or not? Now, what the logic began? The answer? Nice response. புரியுதா? The way of debt is preferable because on equity as well as based on characteristics of source of fund. Are you comfortable? Okay. Good. Shall I go to the next problem? Next.
So one doubt, sir.
சொல்லுப்பா.
Sir, if there is any scope for calculating the return on capital employed and the KD is given in the question, can we conclude the answer like return on capital employed is greater than KD, so fund will be better than equity fund in the exam?
திரும்ப சொல்லுங்க. Sorry.
Hello, are you audible, sir?
பிரேக் ஆகுது, கொஞ்சம் பரவாயில்ல சொல்லுங்க.
சார், இப்போ வந்து ரிட்டர்ன் ஆன் கேபிட்டல் எம்ப்ளாய்டு வந்து கண்டுபிடிக்க முடிஞ்சதுன்னா, கேடி வந்து கொஸ்டின்ல கொடுத்திருந்தாங்க அப்படின்னா, ரிட்டர்ன் ஆன் கேபிட்டல் எம்ப்ளாய்டு ஜாஸ்தியா இருந்தது அப்படின்னா, ரிட்டர்ன் ஆஃப் கேபிட்டல் எம்ப்ளாய்டு வந்து கேடி வந்து ஜாஸ்தியா இருக்கு. ஸோ வி கேன் டிபெண்ட் ஆன் டெட் ஃபண்ட் அப்படின்னு ஆன்சர்
கன்க்ளூட் இல்ல, அதுக்கு ஒரு வெரிஃபிகேஷன் காமிக்கணும்ல கண்ணா. இது தியரி பார்ட் that we are verifying by way of computation. That's why we have to do the computation part.
Okay, sir. Okay, sir. Thank you.
Okay. I'm justifying by in line with the theory. It's their answer is that. That's what I'm justifying. Understood? Next. We'll go to next problem in capital structure. Hemabundu, படிக்கிறியா என்னைக்காவது?
Yes, sir.
Good girl idea. படி.
Calculate the level of earnings before interest and tax at which the EPS indifference point between the following financing alternatives will occur. Equity share capital of rupees 6 lakhs and 12% debentures of 4 lakhs, or equity share capital of 4 lakhs, 14% preference share capital of 2 lakhs and 12% debenture of 4 lakh rupees, Assume the corporate tax rate is 35% and par value of equity share is 10 rupees in each case.
Now, what is the requirement of the question?
EBIT, sir.
No. We have to compute indifference point. What is the requirement? We have to compute indifference point. Shall we try indifference point, my dears? போலாமா?
A capital structure at which EPS is same.
That's all. Good. Now, indifference point represent in which level of EBIT option 1 and option 2's results are same. Option 1's EPS is equal to option 2's EPS. That is called indifference point. That level of EBIT is called indifference point. Understood, my dears? Hemabindu puriyudha? Yenda EBIT, like in which level of EBIT option 1's EPS, earning per share, would equal to option 2's earning per share. That is called indifference point. Ready garu arthamainda? Good response.
Yes, sir.
Now, 2-column table, particulars option 1 and option 2. 2-column table, particulars option 1 and option 2. Under the particulars, EBIT first particulars column we can write, thereafter we can fill the option and option 2. Okay, EBIT. The next line item, interest, balance is called EBT, less tax, balance is called EAT, less preference dividend, balance is called earnings available to equity shareholders. Divided by number of equity shares is called earning per share. I'll repeat once again. Under the particulars column, you have to write EBIT less interest is equal to EBT, less tax is equal to EAT, less preference dividend is equal to earnings available to equity shareholders, divided by number of equity shares is equal to earning per share. You got it or not? All of you got it?
Yes, sir.
Yes, sir.
Now, EBIT, let X is equal to EBIT because that is what you are going to compute now. EBIT only you have to compute. In option 1, how much the interest, Kanna? In option 1, how much the interest?
48,000.
48,000. Available, you have to compute them. Whether available or you have to compute, Kanna?
4 lakh into 12,000.
4 lakhs debentures at 12% is equal to 48,000. Whereas option 2, also same, right?
Yes, sir.
Same, 48,000. Balance equal to EBT. What about the EBT? X minus 48,000. Am I right? Both the column X minus 48,000. Right, Adagana? Less tax.
Yes, sir.
What about the tax?
35%.
35%, sir.
35%. 38% போறதும் tax. Balance is equal to earnings after tax. Remaining 65%. 65% on x is equal to 0.65x minus 48,000 into 65% is equal to how much?
31,200.
31,200. 31,200. That side also same, am I right? Right, huh? Next. Less preference dividend. Any first column, any preference dividend is there? First option then. In first option, equity and debt only available. Therefore, there is no preference dividend. Whereas second option, preference shares 2 lakhs, 14% preference capital. So 14% on 2 lakhs is equal to how much?
28,000.
Huh?
28,000.
28,000. Option 2 la 28,000. Right? Therefore, earnings available to equity shareholders is equal to 0.65x minus 31,200. Whereas option 2, 0.65x minus 31,200 plus 28,000 is equal to how much? 59,000. 59,200 minus of minus. Therefore, 59,200. Or you got the idea? Manjunath, Puridappa?
Sir.
Divided by number of shares. Option 1, number of shares, equity share capital 6 lakhs, share price 100 or 10 10 each. Therefore, first option 60,000 is equity share capital, whereas in second option 40,000 is equity share capital. So the answer for the EPS should be, both should be same. Am I right? So up to this stage, are you comfortable, Mohan Raj?
Yes, sir.
Doshika, Raja, Puridam. Now, EPS is equal to earnings available to equity shareholders. What are the earnings available to equity shareholders? 0.65x minus 31,200 divided by 60,000 should equal to option 2 CPS 0.65x minus 59,200 divided by 40,000. So denominator 60,000, 40,000, zeros cut pannu 6 and 4 இருக்கும். 2 and 3 மாத்திக்கலாம். Right? Right? அப்ப 2 into 0.65x is equal to 2 into 0.65 எவ்வளவுதானா? Good response.
1.3.
1.3 x is my 1.3x minus 62,400, 31,200 into 2 should be equal to 3 into 1.65x, how much? 1.95x minus 59,200 into 3 is equal to 59,200 into 3 is equal to how much, my dear? Take over one time till tomorrow. 59,200 into 3.
1,77,600.
1,77,000.
1,77,600, sir.
600. Therefore, 1.30x minus 1.95x. 1.30x minus 1.95x should equal to minus 1,77,600. That minus become plus 62,400. Therefore, minus 0.65x is equal to how much? 177,600 minus 62,400.
1,15,200.
Lakh and 15,200 minus lakh and 15,200. Minus and minus get cancelled. Therefore, lakh and 15,200 divided by 0.65 comes to already
1,77,230.
230. So EBIT, that is indifference point, that is indifference point, is equal to 1,77,230 rupees. Right up. All of you got lakh and 77,200. Mohan Raj Purida.
Yes, sir.
Sir, la sorte liye Purida temu soltuma. Mohan Raj, computation Purida kanna.
சார் அது கடைசி மட்டும் புரியல.
தெரியும், sorte தெரியுது. Equation புரியலையா?
ஆமா சார்.
டெக்ஸ்ட் பண்ற பாக்குறியா? டேபிள் போட்டியா? டேபிள் போட்டியா?
டேபிள் போட்டாச்சு சார்.
அது டேபிள்
அப்படியே வர்க்கிங் போட்டாச்சு.
டேபிள் கீழ அதே வர்க்கிங் தான் பாரு. புரியுதா பாருங்க, சாட் பாக்ஸ்ல இருக்க பாரு. மோகன் ராஜ் புரியுதா கண்ணா?
எஸ் சார்.
சிம்பிளை பண்ணா 1,77,000 எவ்வளவு வருது கண்ணா? $230 கண்ணா. $1,77,230. Like என்ன meaning? If a EBIT is equal to 1,77,230, you will get zero profit. So not, you will get what? EPS of option 1 and option 2 same. புரியுதா?
Yes, sir.
Substitute பண்ணி பாரு. EBIT 1,77,230 வச்சு பாருங்க. எவ்வளவு EPS வருது செக் பண்ணு. ரைட் ஹேண்ட் செக் பண்ணிடலாம் அப்படியே. இதுதான் ஆப்ஷன் 1 EPS என்ன மோகன் ராஜ்?
போட்டுட்டு இருக்கேன் சார். ஒரு நிமிஷம்.
புரியலன்னா கேட்க நான். EPS comes to
1.4, sir.
check it out. 1.4. Both tally at the parmo. 1 rupee 40 paise earning per share. Manikanda புரியுதாங்கண்ணா?
டேலி ஆகுது சார்.
Good. Abhinav, any doubt? Jyotika Nachkana,
Tally ಆಗುತ್ತೆ, sir.
Hemavindu, Reddy Garu, Rahman
Tally,
Khan,
sir. It's completed.
good Khan, Rahman Khan, Manikandan,
Tally.
Sangalpattu Manikandan, Salem Manikandan, Ashwin, எல்லாரும் வந்துதா?
Tally ஆயிடுச்சு, sir.
Good. So, understood how to compute EPS indifference point.
Yes, sir.
Good. So, in this capital structure, what you have learned, how you have to select the capital structure. Selection of capital structure, first priority, market price per share. Then, to compute market price, we need price earning ratio or market price. If it is not available, then earning per share is the criteria. To compute earning per share, we need a number of equity shares. Suppose that is also not given, then we have to solve it by way of selection by way of return on equity. What is the formula for return on equity, my dears? What is the formula for return on equity?
EBIT divided by capital employed in terms.
Return on equity. Earnings available to equity shareholders divided by capital employed into 100. Good comment. Shall we go to the next problem? Yes. Reddy Garu, question chaduvandi.
Kritika company's EBIT is rupees 5 lakh. Company has 10%, 20 lakh debentures. The equity capitalization rate is 16%. You are required to calculate market value of equity and value of fund. Overall cost of capital.
Good. So available data, EBIT is there. Interest computation, debt fund is there. Then tax rate is there. You have to compute value of equity, value of the firm, overall cost of capital also. Now, shall we start? Note it down. EBIT is equal to how much? How much given in this question?
5 lakhs.
5 lakhs. Less interest. How much the interest? Debt fund into interest percentage. How much the interest kana?
$2 lakhs, sir.
2 lakhs upon. Balance is equal to earnings before tax. 5 lakhs minus 2 lakhs is equal to 3 lakhs. Tax, no tax, am I right? 0. So earnings after tax comes to how much? 3 lakhs. Understood logic or not? 3 lakhs is earnings after tax, some ideas? Hello?
Yes, sir.
Now.
Yes, sir.
What about the requirement of the question? என்ன கேட்டிருக்கான்? Value of the firm they ask. Am I right? Value of equity as well as
Market
value of
value
the
of
firm.
equity and firm.
Okay, note it down. Value of equity is equal to earnings available to equity shareholders divided by KE. Earnings available to equity shareholders in this question 3 lakhs. KE also given in this question 16%. Therefore, value of equity is equal to how much? 3 lakhs divided by 16% is equal to value of equity.
18,75,000.
How much?
18,75,000.
18 lakhs. 18,75,000. Any doubt in value of equity? So, what is the formula for value of equity? Earnings available to equity shareholders divided by KE.
KE.
One more requirement is also there. What is the next requirement?
Overall cost of the capital.
No. One more requirement in
Value
that.
of firm.
Value of the firm is equal to value of equity plus value of debt. It's called value of the firm. Value of equity plus value of debt is equal to value of firm. So, value of equity we got it 18,75,000 plus debt fund. How much the value given in this question?
20 lakh.
20 lakhs is given in this
20 lakhs.
question. Therefore, value of the firm is equal to 38,75,000. Manageable? Manigandan புரியுதுங்களா? Are you with me? Good. Emma Bindu understood or not? Ashwin புரிஞ்சுதாப்பா?
Yes, sir.
Any doubt up to this stage? Okay.